Hello traders, Rich here, and here's a quick but detailed update on gold. As usual, if you like video analysis, let me know in the comments or simply leave a like. So let's get started. As we clearly see, gold has been overall bearish for a while, making lower lows and lower highs. We'll see it better on lower time frames, but lately from weekly time frame, we had a break below the 1700 support, which has been holding for a long period of time. Broken downwards, so now we are still bearish. The bears remain in control and would be expecting further bearish movement. For now, we had a reaction around the 1600, around this demand zone. If broken downward, we'll be expecting further bearish movement till around the 1500, 1550, where of course we'll be looking for buy setups. But for now, things are looking tricky here unless the bulls would reclaim the support by breaking back above the 1700 and by breaking above this high, low, and so on. If we break it upward, we'll be expecting a reversal from here because for now we are still bearish, making low lows and lower highs. If you zoom into daily time frame, as mentioned, you can see it even better. We have been bearish from a long-term perspective, impulse correction, and so on, right? And lately we have been trading inside this bearish channel, currently retesting the 1700, which is still acting as a resistance again and again, unless we have a break, an aggressive weekly candle close above this area. Then we would have a shift in momentum from bearish to bullish. If you zoom into H4 time frame, you know that gold has been clean lately. We had a high, broken upward, a classic retest, traded higher, formed a low, broken downward, we traded lower, kept making low lows and lower highs until we had a high, lining up with this previous low, broken upward, a classic retest to it, and traded higher. And it happens to be rejecting also this minor demand zone from H4 time frame. If you zoom into H1, we can see that lately, here we go, here's the low, broken downward, and so on. So lately price formed a wedge pattern, broke it upward, the same structure I showed you from H4, and we are currently trading inside this rising channel. So for the bears to remain in control and break below this for the bears to remain in control and reject the 1700, we need to see this happening, for example, and then a break below it, because for now it is acting as a resistance. Meanwhile, for the bears to prove control from a long-term perspective, we need to see a bullish movement like this and then a break above it from weekly time frame. For now, we are still bearish from daily around the resistance from weekly 1700, and we are looking for the next bearish impulse. It might be a shorter term one before bulls take over, or it might be a long term one breaking below this area for it to reach the 1550, which is lining up with the slower brown trend line. But for now, from a short-term perspective, we are bullish, waiting for the bears to take over for the next impulse movement to start. That's basically it. Short-term bulls took over, then impulse started, and short-term bulls took over, impulse started, failing to make a low, instead made an equal low. That's why we might we have a possible bullish scenario, but it is too early to judge. Let's wait for the market to make the first move by either breaking above it from weekly, or the best way to take over and then trade lower again. Before we continue, I want to tell you about Tickmill. Tickmill is established in 2014 and is one of the leading Forex and CFD brokers with registered users from more than 200 different countries. Tickmill is a no-dealing desk and ECN broker regulated in many countries like the UK, Cyprus, and recently in South Africa. With Tickmill, you can trade a wide range of instruments, starting from Forex to indices, commodities, and even crypto. Most importantly, with very low spreads and trading fees. If you don't have an account yet, make sure to create one using my referral link in the description below to benefit from 5% discounts on your trading fees. And let's continue. As we clearly see, AUDJPY has been overall bullish for a while, trading inside this rising brown channel. However, as mentioned multiple times previously, here and here as well, that we are around a resistance zone. That's why we'll be looking for sell setups on lower time frames. Of course, unless it's broken upward, then we'll be looking for sell setups around the 100 round number. And we are stuck inside a horizontal range between 90 and 97. That's why we'll be trading this range upward and downward until eventually it's broken upward or broken downward for a full uh, reversal long-term bearish movement. But for now, let's take it step by step, right? We're around the resistance, looking for some setups, and as we trade lower and approach the 90 support, we'll be looking for buy setups. If we zoom into H4 time frame, we can see it in a cleaner manner. We had our impulse and we are currently in this correction, waiting for the bears to take over to catch the next impulse movement lower till around the 90 or even 88 support zone. If we zoom into H1 time frame, we can see that we have been lately stuck inside a range. So the lowest low inside this big range is this low, which you can see even better from each one. You can make it a little bit higher, but I always like to go for the wicks lining up with this previous high as well. But from a short-term perspective, we can draw a trend line now, which is still forming. So as per my trading style, for those who already know me, I'll be waiting for a new swing low to form around the lower trend line to consider it valid, and then I'll be selling on breakdown. So that's what I'm be waiting for, and as usual I highlight it like this as our trigger. When the sell is activated, the stop loss of course would be above the previous swing high, and we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective. But for now, we are bullish around the resistance, so we can still trade a little bit higher from a short-term perspective before forming a new low and then break it down, or even trade higher and higher inside the resistance till around the upper bound of it. Before we trade lower, in this case, we'll be updating our analysis. That's it for today. Best of luck, and I will see you on the next one.